Alright, so thought I'd do another video up in the park again. Still looking pretty dry. Not had any rain, any proper rain for quite a while. It'll probably change in the next couple of months. Wettest time down here is normally October, November time. It can rain quite a bit. People are surprised when they find out that we get more rain here than London does, but in London it's spread more evenly throughout the year, as here it's just the winter really. We can go all summer with very little rain. It's quite a nice evening. I'm without Charlie because we took him out to the town of Villefranche this afternoon, where there's a doggy beach, and so we did quite a bit of swimming and chasing stones, and he's a pretty good swimmer, and it was beautiful. The water was gorgeous, and it wasn't that busy, because now September, the crowds of August have gone. It's just the way I like it. I really don't like August in these parts. I'm always glad when it's over. September, October can be really nice, and it's not so crowded. So last week on the markets, it was pretty good. I had a pretty good overall percentage. I beat my 2.5% weekly benchmark quite easily. I was trading the US quite a bit, the S&P 500, which I'm getting more into these days. I mean, I've traded in the past, but I can now get a very tight spread on the trade, which is it's 0.14 of a point, which is pretty good. That's in market hours. I think it's 0.2 outside market hours, which is still not too bad. And I think in some ways, because I've normally traded the FTSE or FTSE stocks as well, although I do a lot less of that these days. I can concentrate on the FTSE, but the FTSE is sort of the what shall we say? It's the second violin. It's not it's the US that drives the world market really. I think London is a better time zone, but for me personally, because I don't like staying in the evening. So when I trade the US, I'll trade it early, prior to the US Open maybe. I've noticed that quite a lot recently we've had a sell-off on the US futures around about the time of the London Open, around 7 London time AM. And then the futures, the US futures, the Americans wake up and start buying. And so it's been a pretty reliable pattern recently. That doesn't mean it's going to last, but so that's been working quite well. And so yeah, my trading last week, most of my profits are on the S&P. I actually took a bit of a loss on the FTSE, but the S&P profits easily outweighed that. So it was pretty decent week. And the other thing that's interesting now is the crypto market. I've dabbled a few quite small positions in the last few months, and one of the coins that's done very well is Cardano, and there is a new fairly major update on the 12th of September, and there might be some decent movement up into that. Maybe some people will sell the news. I saw a guy on Elite Trader yesterday saying he was going to sell the news, sell into the 12th. But I think long term the future of Cardano is pretty good. I think the future of Ethereum is good as well. I think eventually Ethereum will overtake Bitcoin in market cap. I think it's about 9-4 at the moment. Just off the top of my head, yeah, it's around 9-4 the ratio. So Ethereum, if it doubles and a bit more, will be a bigger market cap than Bitcoin. Ethereum's got the advantage that it's more efficient than Bitcoin. It's more used than Bitcoin as a means of exchange. I mean, Bitcoin is, as far as I can see, Bitcoin is basically people buying and holding it. They're not using Bitcoin the way it was designed to be used as a means of exchange to go and buy something, you know. I mean, there's that amazing story very early in the life of Bitcoin. A guy decided to do a transaction, and he found somebody who would sell him 2 pizzas for Bitcoin. But he sold, he paid 10,000 Bitcoin for 2 pizzas, and now, with the benefit of hindsight, we know that, well, Bitcoin was about 50,000 today, so 10,000 Bitcoin, I make that about $50 million for 2 pizzas. So I hope they were good. I hope they were excellent pizza. But the stuff, I don't think people are using Bitcoin as a means of exchange. I think Ethereum is much more being used for that. I think Cardano will be used for that as well. Cardano is developed by the guy who was behind Ethereum, and Ethereum is going to move to proof of stake. At the moment, it's proof of work like Bitcoin, but it will move to proof of stake at some point, maybe next year. Although I believe that's been delayed quite a bit. So I've been accumulating a bit of Ethereum. I'm not trading it. I'm not trying to time the market with it. It's a pretty liquid market actually, but I don't trade it. I have traded it. Okay, I admit that I've traded it, but I'm sort of building a stake at the moment. I'm hoping for another sell-off like we had in July, but it's bounced strongly from July. I mean, July, was it July? I think at one point it hit about 1,700. Well, it's just under 4,000 today. Today is the 5th of September. So that's an interesting. The other ones that I've got a small holding in is I've got some Polkadot. I've got some H-bar. That's the Hedera, which is a very interesting project and is actually having quite a bit of use. So that one's interesting, H-bar. I did sell some H-bar yesterday because we had quite an increase, and I thought I'll scale back on that one. But I've still got some. And what else have I got? I'm trying to buy some Solana, but I want the price a bit lower. It's run up a lot recently, and what we need is a good sell-off in Bitcoin and Ethereum, and all of the rest will follow because they do. And recently the big sell-offs like that have often been at weekends, but this weekend was a bit the opposite. It was pretty bullish this weekend. So we'll have to see if we get a sell-off. I may pick up some Solana, and I'll pick up some more Ethereum and probably some more Cardano. And I think I've also got some Stellar, which hasn't done very well. I'm not so sure about that one. So at some point I might dump the Stellar and put it into Cardano or Ethereum. So anyway, this part of the video will be sound only. So I'm running out of space. So I thought I'd talk a bit about what the indicators I use, and one of my favorite indicators these days is the Bollinger Band percentage B indicator, which is pretty easy to find. I use the TradingView charts. I also use it on MT4. My two chart platforms that I use all the time is TradingView and MT4. I find MT4 quicker, it's faster, but TradingView's got more It's got more indicators and all the rest of it. And yeah, the Bollinger percentage B basically just shows you if the Bollinger Band on the chart has been pierced, and by how much. And I think the values go from 0 to 1, and 0 is pierced to the downside and 1 is pierced to the upside. So if you've got a value of 0.994, then you're looking to go long, because it's amazing, the Bollinger Band over time. I'm a great believer that the markets in the short term revert to the mean. They test the lows, they test the highs, and the trick is to just try and get those just keep picking those lows and highs. I'm not saying you can buy the bottom. I don't think that's possible most of the time. It happens occasionally, but most of the time. But yeah, if you get enough, you're just basically buying an oversold market, and then you're selling an overbought market. But as I've said, I think on these videos before, I much prefer the long side. I think shorting's harder to do, to get right. Any trader who's starting out, one piece of advice, it's not this isn't financial advice or anything, this is just an observation that you would be best just concentrating on the long side. Forget about the short side until you've got, I would say, at least a couple of years experience on the long side trading. Sure, you can make money on the short side. I've made money on the short side and the long side, but I think making money on the short side is harder. Human beings, I've noticed, a market will often bottom and make a V bottom on say you're looking at a 3-minute chart. I quite like a 3-minute chart on the indices. And you're looking at a 3-minute chart and you'll see a V bottom, you see a very fast decline, and then it'll get bought up. On the short side, you can see a market grind higher all day, and you generally hardly ever see those V, well, it would be an A, wouldn't it? The reverse of a V bottom, an A top, which you just, so that's what I would say. I would say the short side is harder. Shorting is harder to do than going long, and it's so anybody starting out, I'd recommend just concentrate on the long side. If you want to short, make your position a third of the size on the short trades, something like that. That's one of the indicators I use, percentage B, Bollinger Band percentage B. I don't use stuff like stochastics. I've just found it not very useful over the years. One of the things that I do use, and I got this from a book by Jake Bernstein years ago, is the first 30-minute breakout. So I've written this indicator in a couple of different programming languages. I've got it on MT4 and TradingView, and it just draws a line, 2 lines, the high and the low of the first 30 minutes trading, depending where you define starter trading is difficult these days, because you've got futures markets that trade basically 24 hours a day. But I find it's quite useful on the FTSE if you're looking at what do we know? God, 7 a.m. on the FTSE is a good time to start that. So the range between 7 and 7:30 on the FTSE can often define support and resistance for the rest of the day. I use the same indicator on the S&P, but I use London time 1300, which corresponds to that's what is that? I think it's 8 a.m. New York time. And that's quite an interesting idea. Basically, Bernstein's idea was you buy the breakout of the high of the first 30 minutes or sell the breakout of the low. And having watched the markets for years, I've noticed that those two levels can be very important later in the day. You can say make a low in the first 30 minutes. Say we're talking about the FTSE and we're talking about, I don't know, 70-40, something like that. You can make a low in the first 30 minutes, 30-40, and then the market moves higher during the day. And then we have a sell-off in the afternoon. Say, for example, the US sells off and the FTSE naturally follows suit. And there'll be support at that low of the first 30 minutes. There's price has memory. It's completely true. There's people who are long at those levels or short at those levels who want to get out at break even or at a small profit, and that's what drives those levels. That's what drives the market at those levels. There's people who are deeply underwater all day and just manage to break even at those levels, so they will close the position, and hence the market will move. So, for example, if that guy's been short all day and he's underwater, he's taking pain, financial pain, which is psychological pain, because the markets are 100% psychological. He's taking financial pain all day, and finally, say 3:30 in the afternoon, he can close that position and break even before commissions or whatever, and he or she, we've got to be politically correct these days, he or she will close the position, and therefore there's buyers in the market, and if there are enough he or she closing their position, then the market will bounce at that level. So yeah, that's mainly what I use. I also look at the 1-day MA, which is calculated as the whole trading day, which in London is 8.5 hours, divided by the time scale of the chart. So on a 5-minute chart, I think it's 102 bar moving average, just an ordinary moving average, simple moving average. And I define anything when the market is above that moving average, it's in an uptrend, and below that moving average is in a downtrend. And every one of my trades, I measure, I determine if it's a counter trend or trend following trade based on that moving average. And I can't remember who I got that from, but that was quite a few years ago as well. So yeah, I just look at those things, and also I think there's a thing with trading, because it's definitely an art and not science, unless you're writing algos and they're just chugging away and trading. But if you're doing discretionary trading, i.e. you're deciding when you're going to enter the market and when you're going to, there's definitely you do learn, you do see patterns repeat themselves. The best period for trading for me is the early morning, even before the actual cash market opens, because the futures market, the volume kicks in London time about 7 a.m. So 8 a.m. for me, which is perfect because I'm an early riser, and we'll often see a really big move at that time. And what I tend to watch is on the FTSE, I'll watch the excuse me, a bit dusty here. On the FTSE, I'll watch the FTSE futures and the FTSE cash as it opens, and you'll often get a big discrepancy between what the futures are showing and what the cash closed at, and generally that difference will close over time. So if the FTSE's futures are sharply down compared to the cash close, then eventually the cash close will drop, but maybe the futures will rally to meet it somewhere in the middle. And the art is to try and gauge that and see and get a feeling for what's going on, where the money is going, because it's the big money. It's not people like me. It's not people like me, trading a few thousand or tens of thousands. It's people trading in the millions and tens and hundreds of millions that are going to move the market. And you've just got to hang on to their coattails, but also get out when you can. The other indicator for the U.S. market that is useful, I find, is the TIC, the New York Stock Exchange TIC index, and that's a measurement of how many stocks are going up versus going down, and the extreme levels are 1,000 or minus 1,000. And I got this from John Carter's book, which is what's it called, Mastering the Trade, a really good book on trading, one of the best books out there on trading. And he's done loads of videos on subjects such as this, and the way he will use it is he'll look at a minus 10, a minus 1,000 tick level. He will buy that. He says that is panic selling, and he's buying it, and vice versa. A plus 1,000 tick, he will just fade it. He will short it. But he also uses it in other ways. In that if he's long and he sees, I think it's an 800 plus 800 tick level, he'll take profit, because that is almost at super bullish levels. And we know short term, from a day trading point of view, short term, the market oscillates between huge euphoria and huge fear and greed. That's what it does. I think he's right. I think the tick index basically just shows you the level of fear and greed. It's a shame it's not available on the UK market, or as far as I know, on stuff like the DAX. I mean, I think the tick on the DAX would be quite interesting, because it's only 30 stocks, and it's an extremely volatile index. I've traded the DAX a few times, but it's damn scary. It can move at an amazing speed, and because it's a fairly big contract. If you're trading, I can't remember the value of one DAX futures, but it's a big chunk of euros, and I haven't traded it for a long time, probably for that reason. But I as I say, I think the S&P is better. In the same way, I'd prefer the S&P to the Dow. I have traded the Dow, but it's only 30 stocks. It's very volatile, and I don't think I think the S&P is the most liquid, most highly traded stock index on planet Earth, and therefore that's probably the best one to trade. But I could be wrong. I don't know. I think that the key in the markets is just to find what suits your personality, to find what suits you. If you're into buying and holding stocks for 10 years, fine, just do it. That's be Warren Buffett. If you want to be in and out of the market 100 times a day, that's fine as well. Just find something with a really tight spread so you can really clean up that way. I'm somewhere in the middle of those two. I think if I've done 50, 60 trades a week, I think that's quite a bit. I think I did 80 a few weeks ago, which was a lot by my standards. So yeah, that's some of my thoughts on indicators and on the market. So it's Sunday evening here. I'm still in the park. I'm on my second beer, which is going down quite nicely, and I will head home, and I'll probably make dinner. I just picked some rocket. There's loads of rocket in the park now because, well, I guess it's just seasonal. It just springs back up. They must have cultivated it here. I've never seen anywhere else around here with so much wild rocket just growing, and almost nobody picks it. So I don't pick it all, but I pick enough we'll have a nice salad tonight. So anyway, there you go. That's my thoughts. I will try and edit these videos into one later and post it up on YouTube. Please like the video, subscribe to the channel, make a comment if you're a trader trading I don't care if you trade the US S&P futures, the Russell, the Nasdaq, the Dow. You could be trading the yen, the Nikkei. Sorry, I just forgot the name eluded me for a while. Yeah, the Nikkei. I've never traded the Nikkei. I've traded the US indices, and I've traded the DAX, and I've traded crude oil, and I've traded the Euro stocks, and obviously the FTSE and stuff like that. But I've never traded the Asian indices. Maybe the time zone, something like that. But could be one to look at in the future. Who knows? Yeah, this trading stuff is addictive. Anyway, okay, I'll leave it at that, and I'll try and edit these videos into one. Okay, bye.